Hi everyone, my name is Regina and I am an environmental consultant working at Green and Blue Planet Solutions. Thank you for joining us on this webinar regarding the carbon border adjustment mechanism. So Green and Blue Planet Solutions is a Japanese environmental consulting company based in Bangkok, and we were founded by the two Japanese companies, Envix and Yamaki Environment. We provide research and consulting services in the field of environment, energy, chemicals, health and safety in Thailand and the ASEAN region. More specifically, our services consist of IREX and carbon credits, environmental site assessment, chemical management and compliance, and EHS compliance. IREC, or Renewable Energy Certificate, is a tradable green value that is verified and certified qualities according to the IREC standard, providing a strong energy attribution. Purchasing a REC can prove that 1 megawatt hours of renewable energy has been produced from a reliable source, and the electricity consumers can claim all the environmental benefits associated with green electricity that they're supporting. As GBP already has a qualified and approved business account as a registrant in the International IREC service platform, we can represent your business, making online trading of these RECs easier for you. Carbon credits, or sometimes referred to as carbon offsets, are the reductions or removals of CO2 or other greenhouse gases as a credit and can therefore be traded as an environmental product. The difference between RECs and carbon credits is that REC is a power supply tracking system that promotes renewable energy, and carbon credits are a form of tradable greenhouse gas emission reductions effects resulting from projects such as forest protection, energy saving technology, and the introduction of renewable energy. Its goal is to reduce greenhouse gases, and we can help those companies wishing to develop their own carbon projects. Environmental site assessment is conducted to identify potential contamination that impacts a property, and it is required during a real estate transaction. And we can support our clients with the ESA reporting in accordance with the ASTM standards. For chemical management and compliance, we support our clients to successfully complete the process of registration, importation, exportation, as well as possession of hazardous substances in Thailand. For EHS compliance, our experts can help companies in identifying applicable regulations of the country of operation, developing a legal register in various languages, and implementing EHS audits. So today's agenda will be the following. We will start off with the evolution of the EU emission trading system and how it's connected to CBAM. We will then discuss how CBAM works, how the importer will be affected, the goods covered by CBAM, and lastly, how the suppliers, or as the EU regulations refer to them, operators, will be affected by CBAM and the introduction of carbon tax in Thailand. And in the end, we will also have some time for questions. So the EU was formed in 1993. And in 1997, the Kyoto Protocol was set, which was the first legally binding emission reduction target from 37 industrialized countries. And in order to reach these targets, policy instruments were needed. The EU presented a green paper in March 2000, and this paper contained ideas on how the EU emissions trading system, or the EU ETS, should be designed. Several stakeholders then used it as a basis in helping shaping the future further. In 2003, the EU ETS directive was adopted, and in 2005, the system was launched. The overall volume of greenhouse gases that can be emitted by power plants, industry factories, and aviation sectors is covered by the EU ETS, which is limited by a cap on the number of emission allowances. And within the cap, companies receive or buy emission allowances, which they can trade as needed. The initial phase between the years 2005 and 2007 was used to learn by doing. And in order to prepare for the phase where the EU ETS would need to work effectively in helping the EU meet the Kyoto targets. From its initial start in 2005 to 2012, the annual trading volume rose from 321 million allowances to 7.9 billion. The EU ETS is based on two principles. First one being polluter pays principle, where the polluter is responsible for compensating for their environmental impacts. And two, the cap and trade system, where the authority determines the emissions ceiling or cap and then reduces this cap each year. The authority then distributes emission allowances under the cap to EU producers through the EU ETS allowance. A portion of these allowances are allocated through auctions, and others are free allowances that are given to EU producers in hard-to-abate industries to help them maintain their competitiveness. And this system reflects the costs of emissions via market mechanism, and producers are able to trade their free allowances on the market. So for example, a producer that emits higher volumes of emissions than their allowances permits must purchase extra allowances from lower emitting producers. The EU is progressively reducing its free allowance allocation to producers and will stop allocating them entirely in 2034. And due to a decrease in free allowances and cap, the price of the EU ETS allowances up for auction will increase, which will then lead to higher production costs. In turn, this could push producers to import more carbon-intensive materials from other countries, or for them to move their production base outside of the EU to countries with weaker environmental regulations and lower costs. So to prevent this risk, the EU introduced the Carbon Border Adjustment Mechanism, or CBAM, to ensure a level playing field between EU producers and importers of goods into the EU from elsewhere. So what is CBAM then? So in 2020, the European Green Deal was approved, which is a set of policy initiatives by the EU Commission with the aim of making the EU climate neutral in 2050. And in July 2021, the Commission made its Fit for 55 policy proposals to turn this ambition into reality, further establishing the EU as a global climate leader. A part of this is CBAM, where the EU wishes to put a fair price on the carbon emitted during the production of carbon-intensive goods that are entering into the EU, and to encourage cleaner industrial production in non-EU countries. Once the CBAM comes into force, importers into the customs territory of EU must pay for their emissions through the CBAM certificate, which is price based on the embedded emissions of their imported good. So each CBAM certificate has a 2-year duration, and its price is determined by the average weekly auction price of the EU ETS in the week before the good is imported, so that the price of that imported good is as close as possible to the carbon price of the same good manufactured in the EU. Unlike the ETS, there will be no cap and trade system under the CBAM. So the CBAM regulation officially entered into force in May earlier this year, but the CBAM itself will enter into application in its transitional phase that starts on the 1st of October 2023. And during the transitional period that starts in October and finishes on the last day of September in 2025, importers will have to report at the end of each quarter the emissions embedded in their goods that are subject to CBAM without having to pay a financial adjustment, giving time for the final system to be put into place. So importers of CBAM goods will not need to be authorized during the transitional period in order to import these goods into the EU. Customs will inform importers of CBAM goods of their reporting obligations at the moment of import. Verification of the CBAM report by an external independent body will only be mandatory from 2026. From the 1st of January 2026, importers of CBAM goods into the EU will have to declare by the 1st of May each year the quantity of goods and the embedded emissions in those goods imported into the EU in the preceding year, meaning that the first report will have to be submitted by the 31st of May in 2027. At the same time, they must surrender the CBAM certificates they have purchased in advance from the Commission. By 2030, the CBAM aims to include all products covered by the EU ETS. And the transitional period, combined with the gradual phasing in of CBAM between 2026 and 2034, will allow for a careful transition for EU and non-EU businesses as well as authorities. So CBAM will enter into force in October this year. And it will initially apply to imports of certain goods and selected chemical substances whose production is carbon intensive and at most significant risk of carbon leakage. And these include cement, iron and steel, aluminum, fertilizers, electricity, and hydrogen. During this period, importers of goods in the scope of the new rules will only have to report greenhouse gas emissions embedded in their imports without making any financial payments or adjustments. During the first year of implementation, companies will have the choice of reporting in three ways: either a full reporting according to the new methodology or the EU method, reporting based on equivalent third country national systems, or reporting based on the reference values. As of the 1st of January 2025, only the EU method will be accepted. The CBAM system will mirror the EU ETS and will work as follows. So CBAM will be applied on the actual declared carbon content embedded in the goods imported in the EU, according to a formula that will reflect the effects of the EU ETS on the production of a similar good in the EU. As from the entry into force of the final regime of CBAM in 2026, EU importers will buy CBAM certificates corresponding to the carbon price that would have been paid had the goods been produced under the EU's carbon pricing rules. So if a non-EU producer has already paid a carbon price in a third country on the embedded emissions for the production of the imported goods, the corresponding cost can be fully deducted from the CBAM obligation. So here we have a decision tree from the importer's point of view. So those wishing to import to the EU must ask themselves the following questions. Is the good in the scope of CBAM? If not, then they will not need to worry about CBAM right now, but the good may be included in the future. If yes, then they need to know if the embedded emissions of the good can be calculated. If not, default values provided by the EU should be used. And finally, are they an authorized CBAM declarant or indirect customs representative during the transitional period? If not, they are still able to import into the EU during the transitional period, but they need to be able to answer potential questions from customers or the CBAM declarants. But after December 2025, they will need to have a CBAM declarant representing them. If they are an authorized declarant, they need to prepare quarterly CBAM reports in the transitional period. After that, they will need to prepare the reports annually and purchase or surrender CBAM certificates. It is also important to note that only an EU citizen can apply for becoming a CBAM declarant. So the combined nomenclature, or CN, is the EU's 8-digit coding system. It serves the EU's common customs tariff and provides statistics for trade within the EU and between the EU and the rest of the world. If a good doesn't have a CN code, it is not covered by CBAM. If a CBAM good doesn't have the correct CN classification, it will be stopped by the border upon importation. And as previously mentioned, CBAM will initially only apply to certain goods, and these again includes aluminum, iron and steel, mineral products such as cement, electricity, fertilizers, and hydrogen. And some of the expected impacted industries are technology, energy, automotive, etc. The aim of CBAM is to cover all the sectors that the EU ETS covers by 2030. As of today, the EU ETS focuses on the emissions that can be measured, reported, and verified with a high level of accuracy, which are carbon dioxide, nitrous oxide, and perfluorocarbons. Some of the sources of these gases are maritime transport, production of nitric, and the production of aluminum. The CBAM declarant will eventually have to submit annually a declaration of the embedded emissions in the goods imported to the EU. The embedded emissions means, per definition, the direct emissions released during the production of goods and the indirect emissions from the production of electricity that is consumed during the production process. And this should all be calculated in accordance with the set out methods in the EU regulation. So direct emissions or scope 1 emissions are generated from any time your business burn any fuel that then creates emissions. And indirect emissions or scope 2 emissions in this case is any type of purchased heating or electricity that you're not directly in control over, but someone else has still generated emissions in order for you to be able to produce your product. If a CBAM good is embedded emissions can be calculated and verified, the importing company will have to rely on default values provided by the EU Commission. And the default values will be based on the average emission intensity of the worst performing EU ETS installations for that type of good, meaning that companies using the default values are at a disadvantage than those using their actual emissions. So EORI stands for Economic Operator Registration and Identification Number, and it's assigned by the Customs Authority when the registration for customs purposes has been carried out in accordance with the EU regulation. The EORI number needs to be used for all procedures related to the customs administrations, and the same number can be used in all EU member states. When a declarant applies for becoming an authorized CBAM declarant, the EORI number of the importing company needs to be used in the application, together with other information as well. So for the transitional period, from October this year until December 2025, the CBAM declarants will have to submit a CBAM report quarterly, and after that, they will submit one annually. So the report should contain the following. So the total quantity of goods, either expressed in megawatt hours for electricity or tons for the goods. Total embedded emissions, the total indirect emissions, and also the carbon price due in the country of origin. And this is just a quick overview of which emissions each sector will have to report on and in which unit. As we can see, for some fertilizers, the emissions from nitrous oxide will also have to be reported on, and the EU will publish further guidelines on how each sector should measure and report their emissions in the future. So in the CBAM regulation posted on May the 10th of 2023, the Annex 4 mentions how the embedded emissions from the suppliers have to be calculated, both for simple and complex goods. In these slides are the equations used for simple goods, where one needs to know its direct and indirect emissions. To sell covered goods to the EU, non-EU companies will have to implement carbon accounting to track the embedded emissions associated with these products, and to have these embedded emissions independently verified, as this product-specific information must be provided upon importation. If importers are not able to report on the embedded emissions, they may have to pay higher emissions costs than what they should have paid, as the reference for the embedded emissions of that good is based on the worst case scenario. And the EU companies importing would rather use calculated emissions values than the default values. So suppliers not doing carbon accounting could risk losing the competitiveness of their products, or importers negotiating for a lower price. Additionally, supply chain disruption may occur if imported goods are stopped at the border due to imported covered goods not being declared to customs by an authorized declarant, or due to incorrect classification of goods according to the CN codes. A more relevant risk measure is vulnerability. Vulnerability measures economic dependency, export diversification, and export concentration besides exposure, and thereby sheds light on those exporting countries that will potentially carry the largest burden of this CBAM mechanism. So, for example, a non-EU country would be most vulnerable if it was to predominantly produce and export CBAM goods for the EU market, and specifically if the country's GDP strongly depends on these exports. Eventually, the EU Commission wishes to set up a system that allows operators of production installations in third countries to register in a central database and to make the verified embedded emissions from production of goods available to authorized declarants. An operator should be able to choose not to have its name, address, and contact details in the central database made accessible to the public. It is also important to note that the importer will always be the one held accountable for the correctness of the data, both in terms of embedded emissions, but also CN codes, EOR number, etc. Based on last year's export data, the total value of Thailand's exports of the 5 CBAM covered goods, excluding electricity then, to the EU consisted of 212.9 million US dollars, or around 0.07% of its global exports and 0.8% of its EU exports. Of this portion, the majority consists of iron and steel products, which together represent 67% of the CBAM goods exported to the EU, followed by the aluminum, which is 33% of CBAM goods. So initially, the CBAM will not affect Thailand in a significant way, given that the CBAM product categories that are exported to the EU comprise a very small portion of Thailand's total export value. Nevertheless, Thai businesses should be prepared, as the EU may expand the scope of goods covered under CBAM. Furthermore, there is the risk that other countries may strengthen their climate change measures in a similar manner, and that other drivers to reduce emissions, such as net zero trends, will assume a greater importance in Thailand in the near future. As of today, there are 27 countries with significant carbon tax. Some of these include Argentina, China, Mexico, Sweden, and the UK. Countries that are likely to implement a carbon tax include Brazil, Pakistan, Serbia, and Thailand. Australia is also discussing, in line with CBAM, to implement carbon tariffs on steel and cement imports from countries with lower climate goals. Hence, several countries are already starting to take similar actions to CBAM and adjusting. So Thailand's excise department is planning to impose a carbon tax on three sectors, namely energy, transport, and industry, in order to encourage companies to use cleaner or renewable energy, reduce CO2 emissions by up to 30%, and cut the cost of imported fuel. This new scheme is meant to help the country achieve carbon neutrality by 2050 and net zero greenhouse gas emissions by 2065. The Director General of the Excise Department has said they need to conduct a study of carbon tax collection measures and jointly develop the standards for measuring emissions with relevant parties and experts, particularly with the energy and industry ministries. He has also stated that Thailand's carbon tax structure must comply with the international standards, especially CBAM. The department is in the process of jointly drafting a carbon tax structure with the Natural Resources and Environment Ministry and the Thailand Greenhouse Gas Management Organization, as well as setting up a team to study the CBAM to come up with a carbon tax that meets international standards. Thailand's excise department has not yet provided more details regarding the new carbon tax. However, a study is currently underway and is expected to be completed by the end of 2023. So key takeaway is that if the CBAM declarant can prove that a carbon price has already been paid in the country of origin, in this case Thailand, they will need to buy less CBAM certificates. And this is an advantage to the suppliers or exporters, as the importing companies will want to import their goods as it's cheaper for them that way. Hence, Thai companies wishing to export to the EU should measure their emissions and get them verified by a certified third party. On the 17th of August, the EU published further documents for guidance. The PDF gives instructions on how the operators should adjust to CBAM, how to measure, monitor, and report their emissions in more detail. An Excel spreadsheet has also been created to help with the communication between operators and the reporting declarants during the transitional period. However, this one is not legally binding. So finishing off with a quick summary of CBAM, it will enter into force in October this year, and eventually all goods covered by the EU ETS will probably need CBAM declarants and certificates. Initially, CBAM will not affect Thailand that much, but it will probably in the future as the scope of CBAM expands and other countries are implementing similar systems. Hence, there is a strong need for tracking emissions, and we at GBP may be able to help your companies with this. And as CBAM is still quite a new concept with guidelines being updated regularly by the EU, we would like to have a discussion with you on how we can help each other in achieving the standards set by the EU and CBAM. So lastly, before wrapping up today, we would like to announce our next webinar about the ICC, which will be held on the 28th of September, and you can sign up for it through our website. Thank you all for coming today, and wish to see you in the next seminar. Thank you.